Hey, look, it's the Doublewide Dudes. Woo, watch out. All right, ladies and gentlemen. Thanks for tuning back in to another episode of Doublewide Dudes. How we doing, AP?
I'm feeling a lot better. I know we had to skip a week of this podcast, but my kids brought home some kind of stomach bug from school. Mm-hmm. They're little petri dishes, Mousetrap. Yeah. They whatever they catch at school, they bring home, and heck, we got 4 of them. So our entire house is just going round and round. And unfortunately, I caught it, and we had to skip an episode. But I'm back. I'm feeling good. I'm ready to go. That's
good. Yeah, I'm glad you're back. Yeah, I mean those sicknesses, man, it spreads like wildfire at a house with 6, you know?
Yeah, it definitely does. But everybody's back, everybody's healthy, and we're ready to keep educating folks on the process of buying a home.
Mm-hmm. Awesome. By the way, when I was working today, I was browsing on Facebook, and I saw that 13-pound bullfrog article.
That thing's wild, huh?
Did you see that thing?
I did. That picture's a little crazy.
Yeah.
Anybody that's done any hunting or any fishing knows how to create those optical illusions with their pictures, though.
Make it look big?
Yeah. But that thing was still huge, right?
Yeah. I couldn't even imagine frogs even being a pound.
Yeah.
What's with a 13-pound bullfrog? Right? Where did that thing come from? South Texas. Everything's unexpected, you know?
Everything's bigger in Texas, brother. You know that.
Yeah. That reminds me of in La Jolla Lake, my buddy caught a big bass. And it was his profile picture on Facebook, and the thing looked monstrous. And but you know, he just held it up to the camera at the right angle, and it looked huge. It was still big, but it definitely wasn't as big as it seemed.
Yeah, you gotta be careful what you buy into on the internet. Mm-hmm. You know, not everything on there just because it's on the internet doesn't mean it's true. And the same goes for information. Mm-hmm. You know, we've had a lot of folks call us saying they've seen an ad online or something saying advertising 1-2% interest rates on mortgages, mm-hmm. and for 99% of the folks we talk to, that's just not something that's going to be a reality. And that's why I thought it'd be important that we cover this portion of the home buying process on this segment we're talking about with starter homes. Mm-hmm. You know, just like we encourage people to shop around for the house, it's equally as important that you shop around for a mortgage and make sure you're getting the best possible financing terms out there.
Yeah, it's very important. It's very important. I mean, I would say 70-80% of the people that call in, that's probably one of the first questions they ask.
Right.
You know, I don't know if they get misled in other places or other locations on what they can expect, or people turn away from their credit score and all types of things, right? So I'm excited about this episode, and the financing part of a home is a bit tricky, but as long as you know what you're going to get yourself into and what to expect and what the banks expect, you can make a good decision and make sure you do something right.
Yeah, I think one of the problems out there is a lot of folks, particularly in the manufactured home industry, they try to be or pretend to be the bank, mm-hmm. and it's important for folks to know that even you and myself, Mousetrap, we're not licensed loan officers, so when it comes to things like the exact monthly payment, the exact down payment, interest rates, those kind of things, mm-hmm. I don't know the answer. You don't know the answer. Only a licensed loan officer is going to know that answer. Mm-hmm. And I'm sure you've received calls just like I have on folks that were promised, the moon when it came to a monthly payment, only to submit an application and find out that that's not actually the case. But uniformly, whether you're buying a manufactured home, a site-built home, condo, whatever, there are some uniform things that banks look for, and like you said, I think the more educated people are on those things, mm-hmm. the better able they can set themselves up for success and really put themselves in a position to get the best possible loan for them.
Yeah, absolutely. I mean, we don't make a dime off financing, AP, so
right.
We specialize in getting the right home for the right family, and that's what we do, but we also do want to give them the best information to help get a loan, right? Because without the loan, they can't get a home unless they're going to buy it cash. But
it's a big part of the process.
Yeah, but let's go through it from beginning to end. Kind of what homeowners need to know, that all that the bank looks into for them to determine the down payment and monthly payment. You know?
Yeah.
So what do they look for? Let's go from start to finish.
Well, there's 4 basic things, and again, whether you're looking to buy a site built, manufactured home, modular, whatever it is, it's going to be the same 4 basic things that the banks look for, and really what it all comes down to, they're looking for the overall stability of the potential home buyer. You know, the one that everybody knows about, and it is a very important factor, is credit score. Yeah, and basically what it is, it's a number that gives the banks a snapshot of your financial past. And it's not the end-all, be-all into the banks approving you or not. There are plenty of banks out there that offer second-chance financing or financing for lower credit scores. So definitely don't want to let that scare you, but it is one of the things that the banks are going to look at.
Yeah, on that note, you know, people call in, the first thing they ask is, hey, what credit do you need to apply for a home?
Right.
And I tell them, well, 21st Mortgage, the bank that we deal with, you know, they can approve scores as low as 500. There's different factors that go into that we're going to get into, but with them thinking that they have a bad credit score, maybe because it got turned away elsewhere, right? So necessarily 5 or 6, or whatever your credit score may be, you can't let that scare you from moving forward.
Right. And like you said, there are programs out there for folks that have low credit scores, so definitely don't want that to stop anyone from trying and at least seeing what the bank's going to come back with.
And what you need to improve on.
Right. You know, it doesn't cost anything, at least with us, Mousetrap, it doesn't cost anything to get the answers from the banks. You know, obviously the lower the credit, the higher the down payment, higher the interest rate, that sort of thing. But you got to keep in mind, too, if you're renting, Mousetrap, that's 100% interest.
100%, yeah.
So even if you got to get your feet wet with a little bit higher interest because of where the credit's at, there's really no better and quicker way to improve your credit score than having a mortgage on your credit that's in good standing, right? So a lot of folks want to know what goes into a credit score, and just like financing in general, there's no easy answer. But basically, there's a number of factors, things such as payment history. Did you pay your bills on time? Are you consistently on time? What they call credit utilization. You know, so how much of your credit have you used? If you've got a $10,000 credit card, for instance, are you using $9,999 of that? Are you only using $1,000? That sort of stuff.
Yeah.
And then the length of your credit history. You know, how mature is your credit? Have you had years of experience? Do you have 10 years of payment history? That sort of thing.
So all those 3 things go into the credit score.
Right.
You know,
right.
and then that is just one of the parts that the banks look at.
Yeah.
Right.
Yeah, it's just one of the things, and I would almost argue it's the least important of the things that banks look at. You know, banks do offer programs for folks with low credit, whereas if you've got low income, that might be a different story. So credit is definitely something that can be overcome, but for some reason it's the first thing that comes to people's minds, right?
Yeah, I think it's because if they do their shopping and they're going around looking for a home, these retailers just want to pull their credit right away. You and your brother used to work at another dealership, and that's one of the things that they trained you on, right? Like, you got plenty of homes in the lot, and people want to come in and see the homes. You know, the first thing they do is like, hey, well, let me pull your credit score.
Right.
Hey, let me pull your credit score. Hey, welcome in. Let me pull your credit score.
Yeah.
Right? So that's, to them, it's like, hey, well, this is what's going to be the determining factor for me to get approved or not. And really, it's just part of it.
Right. I tell you, at the time, that's what we did because we were brand new. That's all we knew. Now that I've been in the industry, you know, going on 8 years now, I understand that that's more of a benefit to the retailer, to the company, than it is to the customer. What we tell people, Mousetrap, is really don't let anybody pull your credit until you've decided on the home. The reason being, and what some folks don't know, is you actually reduce your credit score just a little bit when you get it pulled. But if you're getting it pulled here and you're getting it pulled over there and in 10 different places, you know, we've seen customers that went to shop for a car, all of a sudden their credit gets pulled by 10 different places and it drops their credit score by 30, 40 points. So you definitely want to protect your credit. It's not the most important thing, I would say, when banks look at whether they can give you a loan, but it is very important, right? So protect it, and don't let anybody pull it until you are ready. People shouldn't have to see your credit score to justify letting you see a home.
Exactly.
Right? And I know that's our way of thinking. Unfortunately, in this industry at least, it's a newer way of thinking. But if someone doesn't want to show you a home, there are plenty of companies out there that would love to have your business and be more than willing to walk you through a home and let you see what your options are before they pull credit and decide whether you're worth their time or not.
Yeah, and a good thing for people to do just to find out your credit score. Not too many people are savvy, and they just don't pay attention to these things. For some reason, it's not really taught in school, right? To know your credit score.
Yeah, it should be. But yeah, it's weird. It's not. They got trigonometry in there, though.
Yeah, it's kind of odd, but I mean, the thing that I did when I bought my car is just go to Credit Karma or any service that provides you your credit score for free.
Yeah.
Right? That's going to be a good indication to give you an estimate of what your credit score is. Right? That way you know what you're working with. So there's really no need to get your credit pulled at the dealerships just to see these homes. And just to touch on the 3 credit bureaus, it's Equifax, TransUnion, and Experian. Right? And actually each of these bureaus, they allow you to pull your credit once a year for free.
Right.
And this is going to be the actual source of where your credit lays. So.
Yeah, and even if you're not looking to buy a home, it's actually a good best practice to pull those bureaus at least once a year just to make sure someone else isn't using your credit.
Yeah.
But depending on the type of loan you're going for, some banks may look at all 3 and take the one right down the middle. Other banks just look at one, depending on what's most used and most reported on in your area. But a number of different scenarios, right? So the biggest rule of thumb when it comes to credit, first and foremost, like you touched on, Mousetrap, don't let your credit score scare you, because there are loan programs out there for just about any kind of credit profile. And also to know that it is important to pay bills on time when you can, because the higher the credit, the better loan program you're going to get from the lenders.
Yeah, and that's just one of the things that the bank looks at. Another one is going to be current debt versus income, right? They're going to see what you make monthly. They'll take a percentage of that and separate that amount for your bills, in essence, car payment, mortgage, things along that manner. And they look at what you make and determine if you can afford the house. Right. Why don't we elaborate on that a little bit?
Yeah. I would say this, out of the 4 things the banks look at, Mousetrap, is arguably the most important. Like we were talking about, you can overcome bad or challenged credit. Banks legally are not allowed to lend people money that, based on these ratios, what they call debt-to-income ratios, they determine aren't able to afford the home. And basically what it is are your current debts versus your current income. And it's important to keep in mind, it's not just the current debts you think you have, it's the current debts that are on your credit report. Yeah. So even if you co-signed for a car for your brother 3 years ago and forgot about it, when the banks go to run a home loan application, they're not going to forget. That's going to be right there front and center.
Yeah, that's right.
Things like child support, student loans are going to be on there, back taxes or anything like that. All that's going to come across on either your pay stubs or your credit report.
Yeah. And also to keep in mind what's not in your current credit report, right? But when you're going to get a new home, the banks are going to look at the land payment or the park payment. Right. They're going to want to know where the home's going to be set. Without that, they won't even do the application. Right. So if you're going to go into a park, you're going to have to look at what the park's going to charge you for rent. If you have land and it's paid off, like what are the taxes going to cost at the end of the year, right? And anything that's going to need to be done to the land for the home to be set, they'll also take that into consideration, right? Sometimes people use the land as down payment because they need water, septic, and electric, and that can be anywhere from $10,000 to $20,000 bill. Right. So they'll roll that into what your debts are, and a really, really important factor is that you got to make sure you disclose that up front. That way, when the banks are going to finally close on the loan, that's not going to be a surprise, and you might end up losing the possibility to get a house.
Right. That's just an overall best practice when dealing with the banks. I mean, it's important to keep in mind that they only get paid when they approve you for a loan. So it's not like they're sitting up there in some magical office trying to figure out ways to not help people get into houses. But if folks don't disclose things up front, chances are it's going to come out at the end. And the last thing we want to do is have a family get all excited and think they're ready to get to the closing table just to find out that they've got a $350 a month owner finance land payment that they weren't telling anybody about, and all of a sudden they're out of budget and can't get a house.
Yeah, those small numbers can really be the difference on getting approved or not.
Right.
So any car payment, land payment, student loan, anything that is required for you to pay on a monthly basis, you have to disclose that up front.
Exactly.
That way the banks know what you make and what you pay. They'll take that into consideration to approve you for a house. Right. Yeah, so credit score, debt to income ratio, those are just a few things that the bank looks for. But why don't we touch on income itself? AP, we have to let them know that the banks look at provable income. Right. Yeah. They're going to want to see pay stubs, last 2 years W-2, or your previous 2 years of taxes if you're an independent contractor. They want to see what you report and what you get paid, because that's how they prove the income. So, and if you get paid cash under the table, you have to keep in mind that that's not going to be provable income. Right.
Yeah, and this is something that's changed recently. It used to be, even 10 years ago that they had what's called stated income, which is basically you could tell a loan officer, here's what you made, and if they wanted to, they could just take your word for it and let you get into a house. But a lot of that's changed because it was things like that led to the housing crash, just a few years ago.
Yeah.
So yes, it's kind of a pain in the butt. There's a lot of paperwork and a lot of things you got to turn in and hoops you got to jump into. But it's in everybody's best interest, especially the home buyer. I mean, the last thing we want to do is see folks get into a home just to foreclose a few months down the road because, like we were talking about in the previous episode, they bit off more than they could chew.
Yeah.
So it's very important that folks keep in mind it's got to be provable income. If you've got a fantastic accountant out there that's letting you write off this, that, and the other, and on paper you don't make any money, well, then that's what the banks are going to see, and that's what they're going to budget you off of. If you just started your company last month and on paper you made money in the last month, the bank's not going to count that towards your income, right? So typically they want to see 2 years of self-employment records, 2 years of overtime records, 2 years of commission records, things like that. They typically want to see 2 years, some sort of stability, so they feel confident it's going to continue to go on.
Yeah, let's touch on the two different options. And you're a W-2 employee. You get paid in checks. They're just going to want to see 2-year work history, right?
Right. And your most current pay stub.
Okay. So say I'm working at a car dealership, and I'm a mechanic there. I've been doing that for a year or two. And then I move to another city, and I'm in the same profession, just with another dealership, and I'm a W-2 employee. That counts, right? Yeah. Okay. Now, let's say I'm a W-2 employee, and I decided to branch off on my own and start my own business. The bank's going to want to see 2 years just on that business alone.
Right.
Right?
Right, and that's the biggest distinguishing factor when it comes to what they're going to look at as provable income. If you're a W-2 employee, all they want is a 2-year work history. Not necessarily at the same place, not necessarily in the same line of work, just a 2-year history that you've been working, right?
Okay.
Now, when you're self-employed, whether you're a 1099 contractor or you own your own business, then in that case, they're going to want a 2-year tax history of that specific business, right? And there's a lot of things that, I've been doing this 8 years, Mousetrap. I still learn new things about financing. So we don't want to get into too much detail and to confuse people, but we also don't want folks who want to buy a home to, branch off and start their own business tomorrow and come to find out that because they made that decision, they can no longer secure financing.
Yeah.
Right?
As well as buying a new car. Sometimes I see that puts people out of the budget, right?
Yeah, we see that way more often than we'd like. If you haven't gotten your first house yet, maybe you don't need that brand new $80,000 Ford pickup truck, right? And it's not just folks that buy the car for themselves. We see a lot of people co-sign for family, friends, and whatnot on cars and these huge purchases, which end up putting them out of budget.
Yeah.
Right? So definitely important stuff to think about whether you're looking to buy a home 2 years from now or you're looking to buy a home tomorrow, protecting your debt to income ratio is the most critical component of securing a loan for a house.
Mm-hmm. Yeah, the bank has to see that you can buy it.
Yeah.
See that you can afford it month to month.
Exactly.
Yeah, so we have job history, debt to income ratio, and as well as credit. Another thing to keep in mind is when you're about to buy a home, you're going to have your down payment saved up. Right? And that's a frequent question that I get asked all the time. They call in, hey, what's the down payment on this house? Or how much am I going to have to come up with to secure a home?
Yeah.
And always tell them that's really up to you. Right? The more you're going to pay up front, the less your monthly payment's going to be. And chances are you're going to have a lower interest rate. Right? But it's really up to you and what you're comfortable putting down.
I think a lot of times when people call in with that question, what they're really trying to ask is, what is the minimum I can put down to get this home? And like we said at the beginning, we're not licensed loan officers, so we really don't know that answer. Yeah. What we typically do is we do our absolute best to help folks put together a good, solid application, make that best first impression we can with them. And we typically submit for the minimum that the banks look for, 5%. But after that, we're going to let the banks be the banks. The cool thing about the banks we work with, Mousetrap, is they're not going to just come back and say no. Mm-hmm. They're going to say no, but here's what will work. Yeah. Right? And that's the best we can do on our end.
Yeah, and it's important to keep in mind that the retailer is not the bank.
Right.
Right? Not every retailer is the same, but us personally, we don't make a dime off financing like I was mentioning. So if you have outside financing or another source to get the money, even better. Or whatever you're comfortable going with, whether it's a family member lending you the money, going with your local credit union, your own bank, whatever it is, you're going to have that option as well.
Yeah, we always love outside financing, Mousetrap. That saves us a ton of paperwork, right?
Yeah. In the past couple families that I've helped, they've gone that route. They've found their own personal financing.
Yeah.
Right?
Yeah, it's important, like we said at the beginning, to shop around, do your research, and make sure not only are you getting the best deal on your home, but again, that you're getting the best deal on your financing.
Yeah.
Right?
Yeah, and another thing I want to touch on before we wrap this up, AP, is you shouldn't have to pay to get these answers. Right?
Yeah.
We hear quite too often that local retailers in and around the state of Texas, or really anywhere, that the practice is to take a deposit from a customer. Right? And their excuse or their explanation for it is, it's going to let the banks know that you're more serious. Or it's going to be earnest money for them to hold for you to get a better rate or whatever it may be.
Yeah.
I just wanted to touch that. That's really, really unnecessary. It doesn't exist. The bank doesn't require a deposit for them to possibly help you get into a loan.
Yeah, I mean, to me, it's nuts, Mousetrap. I couldn't imagine giving someone my money before I know what my monthly payment's going to be, what my down payment's going to be. But like you said, that is a standard practice in this industry, and it's important for people to realize that you don't need to pay money up front to get these answers.
Yeah.
There are plenty of companies out there, us included, that are more than willing to help get you all the answers you need to make a good, educated buying decision without taking a dime of your hard-earned money out of your pocket.
Yeah. So that's going to be the best way to do it. And I think the reason they do it is just to kind of lock you in. With the majority of the industry not disclosing their pricing up front, they kind of want to get you in and lock you in, right? That's one of the reasons that they require the $500. Because if you're a smart consumer and you go out and shop and you find somebody that's going to be less expensive for the same home, well, you're going to go back to that retailer and be like, hey, thanks for everything, but I'm going to go with another company. I found this home for less expensive.
Yeah.
In turn, what are they going to do? They're going to be like, oh, okay, well, tell me a little bit more about that. And what they're going to do is either one, talk bad about the company or match the price.
Right.
Right? And just they kind of want to lock you in because they're terrified of you shopping around and finding a better deal.
Yeah. Now, with that being said, if you are one of those shoppers out there that did put money down up front to get these answers from the bank, and you've continued to shop around and found a better price out there on the same home, it is important to keep in mind that in the state of Texas, they are legally obligated to refund that deposit money if you ask for that money back. Mm-hmm. And don't feel like you're tied down just because you put $500 or $1,000 down to do an application. Mm-hmm. I mean, I can't stress it enough, Mousetrap. This is the single most important financial decision of your life, and you owe it to yourself and your family to do as much research as you possibly can.
Yeah, and every dollar counts.
Yeah.
You know, it's when you go out and find the home that you want and you're ready to pull the trigger, you know, every dollar counts. That's why the explanation of where your money's going to be going to is really important. Finding out what cost goes where and you know, versus you getting paying a deposit, then they show you homes and you fall in love with the home and try to move forward. Well, you didn't really know what that home cost in the first place.
Exactly.
So you don't even really know what you're getting for what you're paying. And I know there's a lot of information, guys, and financing can be a bit tricky. But I do encourage you guys to call in. You know, talk to me, Jason, AP, or Ernest. We'll be able to answer any question that you have. There's no such thing as a silly question. So don't be shy. You know, feel free to give us a call, and we'll be glad to point you in the right direction. Alrighty, well, that does it for this series on starter homes. Tune in to the next segment where we're going to talk about the home buying process from start to finish. Thanks again, and we'll talk to you in the next one.